Hello, everybody. Welcome to the show. This is Trading with Livevol. My name is Stephen Choi, and this is where I trade my my real Reg T account, and I use LVX to trade. And you guys can see how I use the software. So let's go to my account. So basically, I don't know. I'm having a pretty non-eventful day. Most of my stuff is in cash. I do have IGT left. So basically, they got taken over for stock and cash. I think it's about 18 something. Basically, it's I think it's like $13.86 or something, and then 0.18 of GTK.mi. I think if you go to yahoo.com finance, you can get that. Well, anyway, you can do the ratio. My general thinking on this whole thing is I don't know if I want to really be in it anymore. So I sold this out this morning. So I had some of these calls, October 14. I sold them out for 310, right here, October 14th. And basically now I have this spread on, but you know, I wouldn't mind just getting rid of the whole spread. So basically I'm actually working to close on that spread and then kind of move on to my next trading. Basically it's going to move in conjunction with GTK. Let me see if I can actually Yahoo Finance. GTK.I. So basically, it's gonna move with this stock right here, right? So they bought IGT basically, and whatever this company moves, like IGT will move about a fifth, but basically, like most of the excitement is pretty much done. So I was thinking of maybe writing some calls just to do a buy right going forward. You see how like these guys selling the 30 level, 30 cent kind. But in the end, I think if I could get out, I'll just get out, try to use that money for something else. If not, you know, I might have to roll. The other one I have is this TRW. So basically it got reported that the German company might be willing to pay up to $13 billion. What's funny about the article is when I read it, $13 billion is close to like 120 bucks, I guess. But in the article it said, and this is the Reuters article, it said it was between 110 and 112.5. And on Friday, you see all this trading. Basically, they sold a bunch of those calls, the 110 calls, and some guy bought like 3,000 of these August 95 puts, which kind of, you know, at first I thought they sold both, but I realized most likely he bought them. I was trying to check if he did it with stock, but I couldn't find the stock matching. So if anything, this guy is hedging his current position. So this could be somebody who owns TRW. And as you can see, it had this spectacular run. So what he might be doing is putting on a collar to protect it. So it's not necessarily bearish, I would say. It looks to me more like somebody hedging their existing TRW stock position, but obviously that's just my opinion. Today, this trade happened. Right, so 3,000 of these went up, 3,000 of these around 177.5. These look like just straight sells. I'm not sure if it's closing, but I don't think it's closing because it's both sells. And then even though the option volume was similar, and you can see that somebody also did the January 15th which this is kind of in the middle, so I don't know if they're buying or selling. So maybe, you know, they were buying these. But to me, there's a pretty good chance that maybe both of them will sell because I think they're trying to get it for cash, right? So what does that mean? Well, basically, I had 10 of these calls that I sold today. So you can see that I sold 10 of these for $580. Basically, if you look at my historical trades, yeah, so I bought those for $410. I unloaded them for $590, but obviously I lost a little bit on that butterfly because I was short 5, so I lost a little bit there. But basically, I've done pretty well with this trade, considering the time period. I think I would like to be short these August 110 calls. So the thing that I have working right now is this butterfly. Because I think most likely, if it is true that the price is around 110 to 112.5, maybe the stock upside is maybe $100. So I'm actually working this butterfly, right? The August 105, 110, 115 butterfly. I put in 110 bid because I only want to pay 15 cents for this 115 leg. And then this other leg, I'll do it in the middle, right? So this is $1.80. This is $2.80. So basically, that's $1, and then 15 cents is 115. When I originally did it, that's how I did it, and that's how I got the 110. It looks like the August 105s went up a little. So basically, I want to do a butterfly because I think it's going to get pinned around 110. And I'm willing to bet $1 to basically make 5, so make full fold on my investment. Also, I have a couple of knickknacks going because this is the part I need to get. That's not in the midpoint price. I have this 15-cent bid here, and I have 20-cent bid in here as well. So just trying to buy some wings. Maybe something crazy happens, which a lot of these deals seems like something happens. You can take advantage of it. Now, one of the things I want to tell you guys about is from all the dealings that I did, pretty much from Mankind getting approval, from Hillshire getting approval, and getting bought out, Lowe's, L'Oreal, basically IGT, and Shire, as you can see, like all of those companies got bought out. So I kind of suspect it was going to get bought out. So I think the trend is when you hear these rumors, there's a pretty good chance that they're going to bought out. Now the price is a whole different story, but they all got bought out. And the reason I was so comfortable in betting on all those is I went through this whole thing in like 2006 and 7 when there was like huge takeovers, and basically it was the same thing. Like every rumor ended up being kind of true, more than not. People had a ton of money. They didn't know what to do with it, just like kind of now. And it made sense because there's no organic growth in the company to buy somebody, kind of reduce the cost, and then by maximizing already the revenue that they have, it's a really good strategy with the money you have, right? It's either that or buying your stock back. So in terms of the general idea of how the market is going, the takeover is an ideal strategy. So I think it's going to continue. So I'm basically, because I've gone through this in, what was it, like 7 years ago when I was trading, I think it's going to happen again. So that's why I'm so bullish on all these stocks being taken over. So that being said, this guy buying this collar didn't make me feel that comfortable. Plus, like my upside in these August 100s were kind of limited. So why risk $6,000? So might as well just cash in. Since I bought them for $410, I just sold them for $580. Cash in $2,700. That's a 50% return, and what, in 10 days, and basically go to the next trade. So I wouldn't mind taking some of that money and doing this butterfly. So let's say I do this butterfly, I have it 25 times. So what I'm gonna end up putting up is roughly 2,500 bucks, 2610 to be exact, if I actually get filled. But I have a chance of making basically $4 on that, which gives me a chance to make 10 grand. So let's see. Let me see if I can show it to you guys. Right. So if let's say I put this on. Right. This is kind of what I would have, like kind of a butterfly. Let me actually just run it as one vol. Right, so this is my butterfly right here, right? So at 109, I basically make 7,600 bucks, and then here is my downside. So that's kind of what I'm thinking of putting on. So I kind of mess around with this thing until I like it. So I invest 2,500, risk 2,500 to make possibly 7,500, and I take 5,800 off the table, right? So I will essentially, what I'm doing is the money I made, the 2,700, I'm basically doubling down on this bet, and I'm actually taking the money that originally started trading this off the table, right? So kind of, I think it's pretty good. Now there's two other stocks I want to talk about. One is TWX. So I traded the last big one that Murdoch bought, Dow Jones, and they were like, you know, it was a good experience. The thing I noticed about that takeover, and it was a long one, and it was another stock where he actually did not have any other bidders. So you know how in Time Warner, maybe there might be a few other suitors, but in the previous one, it was just basically him bidding against himself to get the Dow Jones to basically sell to him. So my previous experience tells me that this guy isn't going to give up, just from the fact that I've actually gone through that trading, and I did really well because finally the takeover price happened. But it's not something that went smoothly. So you see how like right now Time Warner is trading way above or decent amount above the actual price that he bid for. I feel like the upside right now is kind of capped. Like this is like too high, right? Not that I don't think the deal's going to get done. I actually think the deal's going to get done. I just think this is too high. So what happens is during this time, there's going to be a hiccup. So all I'm going to do is wait for this hiccup to happen when Time Warner drops about, maybe 10%, because maybe Murdoch threatens to leave, which he did with the other deal. And the stock took a dive, and I didn't do it then because I was already leaning long, so I took a beating when that news hit. But I think Time Warner could have the exact same experience, and this could take a beating. So I was actually working this spread because I want to own the August 85 puts, but I didn't want to pay for it. So I actually have the August, if you look at it, August 85, July 25, 85 put spread, and I'm trying to pay $1. So, I'll see how that goes. I probably won't get it, but generally my thinking is this isn't over, and there's going to be some hiccup. And the fact that today they reported that Fox is divesting some of their assets in Europe makes everyone believe even more that he's trying to get some more cash so he can make a higher bid for Time Warner. So this guy's pretty smart. He's very tough, and and he's like a bulldog, right? So once he wants something, he doesn't really just let it go. And And I'm not just talking because I read some newspaper article. It's because I actually went through a couple of the takeovers he had, and that's how he deals with it. And for him, I think it's more than just making money. So obviously he sees value in making money, but I think he is getting older, and he actually wants to make a mark in the world before he leaves. And I think owning Dow Jones when nobody else thought there was any great upside in it, when basically paper was going down the tubes, the fact that he bid up for it makes me think like it's more like a status and more about his legacy than just money. So I feel like he knows if he can combine this two company, he would pretty much put a gigantic footprint in the world, and I think that actually means something to him as well as just making money. So obviously he wouldn't do this unless he saw tremendous value, but I think there is also legacy that is part of his decision making, and I don't think he's going to walk away from this. It's going to be a while. If he was going to walk away, I don't think he would have ever let out that they bid up for it. So basically, he put everyone on notice that he's bidding up for it. So all the people who are maybe Time Warner shareholders, right? If you're a Time Warner shareholder and you don't want it to go through, well, it's going to take a dive, right? So most of the guys who are actually long-term holders are probably sellers, and the people who are diving into it now are basically ARB guys like me. And so ARB guys, if it came down to a shareholder vote, they're going to vote yes. So that's kind of just generally how it happens. The long-term shareholders, they get no upside. So you would have to be a gigantic fund or something, but for most shareholders, they just kind of like, well, why would I vote yes on it? Because I'm a long-term shareholder and have the stock go down like 20%, right? I might as well sell now and basically, walk away from it. Very similar to what's going on in AGN. I will talk about these guys a lot more too, because I think there is potential in Allergan and Valiant. It's funny how Allergan all of a sudden is now cutting costs after years and years of not cutting costs. Now that Valiant is making that bid, right? It makes you almost think like, in one sense, yeah, they're probably, there's like, I guess there's good and bad. To me, like, yeah, they develop new drugs. They have a high R&D, which is good, which is not same as Valiant, because they're more into running things efficient, right? So the good news is like, yeah, that they actually do R&D, so they provide new medication. But the bad news is they don't run it as efficiently. And today, I guess I saw on CNBC one of their largest longtime shareholders are pretty much out, which means guys like who are, again, the ARB guys have jumped in, and they're definitely going to vote yes. Right now, I don't see any opportunity to really jump in. Looks like they're going to need, so Valiant's going to need to have a special shareholder meeting, try to get the board members out, and then have the board members that they put in get rid of the poison pill. At least I think that's what the steps are. Allergan has really unusual way of doing the shareholder meeting. Apparently, even if they they decide to have it, Allergan themselves can delay it 120 days. Like I said, I just started reading this, but Shire just ended, so I'll have more information as it goes. But right now, there's not that much more on this. So as you can see, that's all on that part. In terms of my trading, I kind of wanted to let you guys know that. So how I was talking to you guys about Trade a Minute. So this challenge, I'm not sure, but I think they made like 46K. The last challenge they lost like maybe $900, and the previous challenge they lost like 3,000. So like for 8 months they didn't do too well, but last time they pretty much blew blew expectations. So basically what I'm going to do is I'm going to commit $3,000, and I'm just going to do whatever that guy does, right? So I'm actually in. I'm gonna have some slippage, just because like I pretty much missed about 33% of his trades, I think, just because I'm not there at the time and I'll catch it late. Recently, because he's been on a hot streak, basically, you know, by the time I look at it, I'm almost like 50 cents, $1 away. So sometimes I just don't get in. So there'll be slippages like that. But in terms of like me trying to follow, I'll put in my 3K and I'll try to follow him as much as possible. Now, one idea I had was I realized that he's very good fundamentally and technically, and I was thinking of combining his analytics, and I was going to use the order flow. So the last trade he did, I really liked, because basically the volatility was low, because it was right after earnings. Like it was like 8th percentile, and the order flow was bullish, right? So I'm going to actually combine what he says and combine the order flow and volatility to make my trading decisions. Now, one thing that is unfortunate on this whole thing is, you know, as you guys know, I want to share everything as much as possible with you guys, but basically, since his is a paid side, I can't do that, right? That's not fair to him. So on his issues, I won't show it. It's not because like I don't want to, but basically I want to keep the integrity of his service, and he doesn't mind me talking about some of his trades after the fact, or like kind of telling people no that I follow and talk about historical results. But obviously you guys can see that he makes his living and basically helps pay for his family and everything like that. So I'm not going to get in the way. So if I don't show you some of the things, it's because it's probably been in their site. Now they only do like one stock, you know, so they only trade very limited amount in terms of their $100,000 challenge, but basically he talks about dozens and dozens of stocks. And then they have like these other things where they provide you trend writers and stuff like that. So, you know, if you know, I'm going to look at some of those stocks, and if I like them, maybe I'll trade. But basically, that's how it is on that part. Let me go through earnings real quick. This is earnings season, so I'm thinking of maybe not doing trading with Livevol as much as maybe doing more with earnings, just to give you guys a little heads up. So CMG, let me just go to CMG right away. Basically, it's trading at the 73 percentile. The option market is implying a 6.4% move. This stock's moved an average of 10.6%. So if anyone who's traded this, like basically they've been blowing the revenue out the waters, right? Whatever the PE expectation. Even this day when it went straight down again, they basically had a great earnings, and eventually basically they recovered. But it's again the time. I don't know. If anything, I would probably bet to the upside, but who knows, right? Last 4 earnings, if you look at it, if you bought the straddle, you lost, made a little, and lost. So it's still even 50-50. CMG order flow is pretty balanced, so I wouldn't say it's leaning one way or another. And as you can see, the largest trade is 134 contracts, so it's not like there's like gigantic bets being made. Next one, Crocs. Now this one does have more orders. Like you can see the calls to puts, 7,000. You see all these calls. It's on the 83 percentile. Basically, the options that they're buying are these August 15th, implying an 8.3% move, and it moved an average of 8.7% the last 4 earnings. Now, I used to trade Crocs. I lost a ton of money shorting the stock just because I thought it was kind of ridiculous how they were valued, and they only sold like, you know, flip-flops, right? But again, I was wrong. I was, you know, you can say early, but it doesn't really matter. I was wrong, and I lost a ton. I got out, and then the stock went down, right? But anyway, if you look at So one of the things I look for is the short float, right? So when I was trading at this float, I think short float was like 20-some%. It's only down to 5. Looks like they're kind of stuck in this range. You know, they're trying to do a turnaround. They're buying these calls. So I think they're buying these. If I had to guess, not so much on people who are shorting the stock and thinking that you know, the stock's going to go down. I actually think that buying it because the stock's going to go up, and it's actually, you know, if I look at it, right, it's been wedging, so it almost makes sense. It will move one way or another. If you buy the calls, obviously you need it to be higher than 1580. So if you look at this chart and know that you have to actually be higher than 1580, that's a pretty whopping move in this stock, right? Or if you bought the calls and shorted the stock, basically you need this thing to be trading like 1420 or lower, right? Either case, it's a pretty wide spread. So even though I think they're buying because of the upside, I'm not sure if it's actually the risk reward seems pretty high, right? Even though if I had to make a bet, maybe I'll buy some calls. Okay. Next one is Netflix. So Netflix, let's see, it's trading at the 40th percentile. As you can see, the calls and puts are pretty evenly mixed, implying a 7.2% move, but it moved an average of 9.3%. Now, if you guys know Netflix, I think this stock's going to move one way or another. I just don't know where, right? Even if the stock doesn't move anywhere, so I think that sometimes it moves up like $50 and then drops down like 10 or something. So in terms of like the movement, it didn't look like it moved much. But if you were invested in it, basically you had a gigantic roller coaster ride, right? But anyway, 40%, like I said, implying a 7.2% move, moved an average of 9.3%. So all the percentages I'm talking to you guys about is the day after. Let's see, the last 4 earnings, basically lost, made, and lost, right? So you lost 3 out of 4 times, which is why probably the implied vol is lower than historical stock movement. You know, I was looking at this and the chart and what I think they might announce. I think if anything, I wouldn't mind selling like a put spread on this, just because I think the stock's going to go up, right? But in the end, like I was looking at this, like a 47-40 put spread, right? And you can sell it for like maybe 370. So let's see. Right, so 350 now. So basically, like you sell it, and you know you have, it's like a 50-50 bet, coin flip in terms of what you can make or lose, and what you're hoping for is it goes up. So I kind of like that bet. I'm thinking about it, but in the end, like, you know, I really don't have too much to base this on, except for the fact that I like Netflix and I'm a client, and I always been, you know, a fan. Although if you look at the fundamentals, so anyone who looks at the fundamentals will pretty much know that this company is like extremely overvalued, right? Like this is like ridiculous PE for somebody who is streaming videos. Now there are people who make arguments like if you think this is same as HBO and they value HBO at 20 billion, then maybe 27 billion is not that far of a stretch, but just in general, anything that has this kind of 65 forward PE is kind of crazy. So you're going to need some, you know, you're not betting on any fundamental. You're basically betting on the momentum. And if for whatever reason you have no cushion, so basically by betting on companies that have weak fundamentals, you're basically betting without a, I don't know, you know how like trapeze, if you do it without a net. So it's without a net. So because if you have like some seriously bad news, this stock's just gonna tank, right? So that's basically what it is on any of these high flyers. You're you're betting without any kind of net. But if you bet on something that has some fundamentals, like a Microsoft or Intel, that's a lot different. Okay, I'll get off my soapbox there. But anyway, so this is Netflix. If I were to do anything, I'll probably sell some put spread. RMBS. Oh man, I have some stories about RMBS back in the turn of the century. So this company, I think, was trading almost like $1,000 or something at one point. I don't know if they like with the stock split or whatever it is now, but I remember there was a guy who had like a 5-lot error. This is when you do a trade because everything was an open outcry, and basically they miscommunicated on a 5-lot, and it ended up costing like 30 grand because I think it moved up over $100 in one overnight. So that was some crazy days. That being said, let's actually go to what they're expecting. So surprisingly, they're expecting a 6.3% move. Stocks moved, looks like an average of 6% in the last 8 earnings, right? So usually I give you 4, but in this one I'm going to give you a little longer one because I'm looking at this one and the shorter one doesn't seem that indicative. So I'm going to go with the last 8 previous earnings is 6%, and right now it's implying a 6% move. Let's look at the stats. It's at the 67th percentile. You can see all this. So basically they're buying calls. How many out of the money? So they're selling out of the money calls, buying the in the money calls. Yeah, so basically slightly bullish, but not so much. Let's go to the earnings. Last 4 earnings, if you bought the straddle, lost, push, lost, lost. So that's RMBS. Let me go to KMB. Let's go to stats. It's at the 62th percentile, implying a 1.5% move, moved an average of 2.3%. Calls and puts are evenly distributed. It's at the 62th percentile, like I said. And the last, you know, I don't know, it seems like a push to me. Okay, now McDonald's. Now McDonald's had some bad news today. Apparently, their suppliers are actually selling them outdated meat products and then relabeling them. So it's a huge news in China. So these guys, McDonald's and Yum Brands, are particularly hard hit. So basically, this looks like pretty much you lose a little every time doing McDonald's. McDonald's is implying a 1.4% move, moved an average of 4%. Sorry, take that back. McDonald's is implying a 1.4% move, moved an average of 1% the last 4 quarters, the day after earnings. And, you know, I look at the chart. Now, there's a couple of things with McDonald's. They have a buyback program going. So, you know, it might be, if they do have bad earnings and it goes down here, it might be a good opportunity to buy because I think the company itself is going to buy stock, right? So if they have good earnings, basically maybe it'll bounce back and retrace back to the $100 area. But yeah, so this is actually pretty interesting. If it drops back down to like 96, who knows, right? Because this long-term chart in go to monthly in McDonald's is pretty bullish, right? See how like consistently it's gone up from 2003. So even if it fell to 90, right, it basically wouldn't break that trend. So I think trying to get in at some point, and usually like stuff like that where you get like bad press about buying like crappy meat and stuff like that, it usually passes after a while, as long as it's not like a real fundamental problem. And I think McDonald's and Yum Brands or KFC is the fastest growing part is in China. So one of my buddies just came back from China, and apparently lot of people over there love KFC. Although he told me that they taste a little different over there than United States. But anyway, that's McDonald's, Verizon. Let's see. Okay, Verizon, 24th percentile, 2-to-1 calls, 95. You know, I mean, this guy looks like this is a risk reversal, but I don't know if they did it with stock. You know, implying a 1.6% move, and it moved an average of 2.2%. So basically, kind of a yawner. I don't know. Even if you sold options or bought options, basically, I don't think you can make too much of it. Plus, basically, the big announcement came last week when they had some kind of conference, and I think CNBC interviewed their CEO, and he basically said how their subscribers grew. So I highly doubt anything's going to happen this time. Basically, just reinforcing what he said in that interview. So that's about it. Oh, the last 4 earnings: loss, winner, loser, loser. So basically, straddle hasn't worked. So generally, as you guys know, I'm not big on buying premium in earnings. I did get few calls, and there are people who are really interested in buying options right after earnings when the volatility gets crushed, and I actually think that's a pretty good idea. How to institute it, I don't know, but I think I'm going to look into it. For those of you guys who are actually interested in doing earnings play, the best earnings play actually might be after the earnings announcements and not before, because after the earnings announcements, you actually have all the information and you can project where the stock should go. So it kind of makes logical sense to me to actually take the risk out by actually understanding. And even if the stock moved up some or down, I think you can still make some money afterwards because you know the general trend. And I think it's interesting. I never really thought about it because I just sell and then I just buy it back the next day. But I think it's something worthwhile looking into. But other than that, I hope you guys have a good day, and I will talk to you guys on Wednesday. Take care.